Good afternoon, ladies and gentlemen, and welcome to this week's live trading session. And in combination with that, we'll also look at the results for the week. There is a bit of background noise. I just have CNBC on so that I can listen to the non-farm payroll numbers. Obviously, it's one of the key numbers of the week, of the month, and with the Fed meeting coming up in September. I don't know if this is the last jobs report that will influence the Fed's thinking, but it's definitely the next. So there's a lot of speculation out there at the moment about when tapering is going to occur, and a belief, I suppose, is the best way to describe it, that if we see some really good numbers today, that the announcement of tapering may occur at the September Fed meeting. I would have some contrary views to that. I think tapering has been well telegraphed now. I think Jerome Powell is doing his utmost not to commit to a date. And I think whether we see a good number or a bad number today, it can be construed in many different ways. We did see a bad number or a poor number in relation to the ADP numbers earlier in the week. And the natural association is that a bad number will see the pushing back of tapering for another period of time. And I would kind of agree with that belief. I do think we're going to see a good number today. I think we're going to see a good unemployed or a big drop in the unemployment rate. So I think we'll see some volatility. Volatility is almost always guaranteed. You'll see that I've put a couple of wide orders way above the market in both gold, maybe not quite so much above it in gold, but in the Dow, just to see if we get a bit of stop activity in the Dow if we do get a good number and a decent rally to the upside. And hopefully what I'll be looking for and what we'll see during the course of this session is a big movement to the upside, and then thinking about trading it from there. So gold has ticked up a little bit and is a little bit against the trade that I did earlier today. So I'm just going to, before we start to get into too much detail and start to think about trading around this number, the first thing that I want to say is, for me, trading around the number is pure lottery. So, and for those of you who've been with us for some time will know this, but what I want to do and what I always tend to do, I wouldn't say 100% of the time, but the majority of the time, is let the number come out, see how the market reacts, and look for the movement to start to slow down, and then make a decision on what you see in front of you, about whether you think there's going to be a continuation of that movement or whether there's going to be a reversal. So let the move happen, and then decide how you want to trade. The movement's going to come in two parts. Over the next hour, we're going to get an initial reaction to the numbers, and then an hour later with the opening bell, you tend to get a second reaction. Not necessarily in the same direction. May well be that you overreact on the announcement, and then people or traders, investors have rationalised that by the time of the opening bell. So be careful of that. It doesn't, just because we see a big movement to the upside, it doesn't mean that there will be another movement to the upside when we hear the opening bell. So gold has ticked up a little bit. It's trading just under 18.17. The trade is, it's ticked down to about 18.15 and a half there. So I have a trade slightly against me. We're starting to pick up a little bit in volatility. We've got 5 minutes or so to the opening bell. I do have a TP in on that trade, so I might just take that down a little. Put a little bit more onto that, so just going to move that down to just below 1808 and a half, and we'll see how that reacts. So looking for a big movement in both of these asset classes. Just going to bring up. We've got a few minutes to go, and we'll see some estimates coming through from the commentators on CNBC in a few minutes. But just in terms of looking at the results for this week, I only have the one trade. I've only traded twice today, so woke up this morning and the DAX trade that I held overnight had returned 25 pips. So a decent enough start. I traded the DAX again, buying on the dip around the opening bell, and I'm short gold, which is against me at the moment. But again, significant profit this week, 687 pips so far, with that one trade left to return. Didn't trade Monday, so this was a 4-day return, and I don't think I'm going to be too aggressive today. I think it's a case of wait and see if we do hit some new record levels in the Dow. Obviously, the S&P and Nasdaq have hit record levels a number of times during the course of this week, and the Dow is playing a bit of catch up. So, bar the gold trade that is still open, I have a perfect record in terms of the number of trades this week. Traded 28 times. There've been no losing trades. There've been no losing trades so far. So if you have any questions, please send them across to Sam. He'll get them across. Obviously, I'm at home today, so Sam will get those across to me, and I'll do my best to answer those. So James is asking if I trade the cash price on ETX. So if you're trading on any other broker than Ava, so Ava used the futures prices. If you trade at the same time as I trade, you're going to be a little bit different with limit orders. But if there is a market execution, you can trade on any other broker at the same time. There is a standard difference between the futures price and the cash price, which starts out quite wide at the beginning of the futures contract, and then narrows so that it's fairly close to cash. So at the moment, you'll see that the prices are fairly similar, but you tend to wind out or start off at about 120 points of a difference that will narrow over the time of the contract. So the contract that I've been trading most recently is the September contract. I think it expires next week. But you can, but for limit orders, you will need to know what the discrepancy or what the difference is between the futures price and the cash price. But I can explain that to you a bit more if you need at some time, and just add on. I mean, the markets move. Both are tracking a cash market, which is fairly similar. A lot of the brokers use the hybrid, the US 30 as opposed to the Dow 30. So there are slight differences, but it's fairly constant throughout the day. I would just always make sure that early each morning you make sure you're aware of what the current difference is between the futures and the cash price. Like I say, it doesn't change a great deal, but it does. It does move over the period of the 3-month contract. Hopefully that explains it to you, but we can go through that again. The jobs numbers just is fairly close to coming out, so let me just get rid of this and we'll see where we are with the prices. So there's no great movement to this point. We have a few people on CNBC now about to give their forecasts. They'll be very wide. I haven't heard any of them yet, and it's difficult while I'm talking to listen to them as well. But we're not seeing a great movement. Gold just popped up to 18.22, 24. So somebody has the number out already, I think. Now we're starting to tick back down. So the number's not particularly big at 235,000. Gold's popped up. The Dow is trading off, but not massively. I think I'm going to have to I have to think about putting a stop in on my gold trade from earlier this morning. It's about 100 pips against me at this point. It might start to steady down in the next short period. So, but it's not a very good payrolls number. I think you're going to see some initial movement to the downside. I do think that there is going to be an opportunity to buy into the index later this afternoon, because as I was mentioning at the beginning of this session, I think a poor number will be perceived to push back that tapering that is going to happen at some point, but is probably going to be pushed back. So the worrying thing as I'm talking to you, and it's difficult sometimes to react, is the way that gold is currently pushing on and pushing higher. So and you can see the volatility in it as it's moving around. So unfortunately, the trade that I have had on from this morning, I'm probably going to have to stop out in the next period. So I'm short gold again, just above the 1820 line, and it's currently trading 1826. I would expect it to settle down, but for the time being, gold is up a good bit over the course of today. I'm just gonna put a buy order in the Dow. So we're probably around here, around 35375. So just above that, I think I triggered that trade at. Gold continues to rally, so I need to keep an eye on that and make a decision fairly soon after the opening bell, I think, as to where we're going to go from here. So as I said, the market's come off a little bit. The Dow is trading off. And I've bought futures there, so I'm just going to take out this wide, the wide limit that I had in. Just going to bring me down to a smaller time frame, and let the gold and let the Dow trade run for a bit. So I bought there at 35,377, and I'm just going to put a TP in up at 417. So that'd be about 50 pips of a return. Just see how that runs through over the next short period. So just gold, unfortunately, still ticking up. So just keeping an eye there on gold. If you do have any other questions, please send them through, and I will respond to them. The Dow trade that I just did, 35,377, fairly close to, and just taken out the TP level on that. Hopefully what I'm looking for now with gold, and this is a bit of a stretch for people who are in that trade from earlier today, looking for that gold market to settle down a little bit. So you quite often see these big movements to the upside, and then a bit of a rationalisation from that point, and we've gone from 1827 back down to 1823, 1824 in a fairly quick movement, still dropping down. It takes a bit of stomach, unfortunately, on these days, and so that's why I often say, and I said at the beginning here, what I prefer to see is the market move and then decide what you want to do. Unfortunately, my limit was taken out before I was able to do that. But you can see there with the Dow, you had that sell-off, you had opportunities to buy the futures a little bit lower, and managed to take 50 pips out on that movement back to the upside. So I'm going to leave those for a minute and just go back to the trades. So excuse me. So we have just going to add in an extra gold and Dow trade here. So two trades left open at the moment, both of those being gold, which I'll continue to monitor throughout the afternoon, and hopefully we continue to see a market that moves a little bit lower in that regard. You can see we're still hovering around 1823, 1824. The Dow has picked up a little bit, is going back to 35,430. But I think I probably won't do too much more in relation to the index trades this afternoon, unless we see a particularly significant movement. I just try to work myself out of these gold trades. We have been up to 1829. We're back down to about 1823 at the moment. Obviously, the trades are a little bit lower than these levels. Probably a combined loss of about 130 pips if we stay at those levels, but I don't want it to run away with me. What I'm looking at here is the Dow is recovering. Gold is going back to those levels that we saw previously. And I will I've just taken 50 pips out of the Dow. Gold is getting back towards a break-even level. It's trading 1821 at the moment. So I might just take a loss on one of those trades, allow the other one to run for a bit and see if I can compensate that during the remainder of the afternoon. But still a decent amount of volatility. Obviously, prior to coming into these numbers, my advice is always to keep your positions reasonably flat. If you do want to have some exposure to the market, keep it small. And as you can see with the way that gold has responded here, it can get aggressive and nasty fairly quickly if you have too much on. So I'm just going to continue to monitor those gold trades during the remainder of this afternoon. If you do have questions, have concerns, then please email me and I'll do my best to get back to you during the course of the afternoon. I think what my approach will be, and I probably should have done it just then, when we traded back down to 1821. I do think we'll go back to that level for a period. Is I'll probably take loss on one of those trades reasonably quickly this afternoon. I might wait for the opening bell and then look to work my way out of the second position sometime during the course of this afternoon. You'll probably see one of those trades close out in the next 15 minutes or so, possibly push it through as long as the opening bell. I do think gold goes back from these levels, but I don't want to ruin what has been another fairly spectacular week by being too stubborn and holding on to that trade for too long as well. So I will look to rationalise that position reasonably quickly after I finish here. So once again, questions, please send them through and I will respond to you during the remainder of the afternoon. I don't think there's going to be a great deal more trading. I think I want to keep the profits that I've had. It's been a fairly spectacular run now for the best part of 2.5 months, and don't want to take too many chances this afternoon. So I'll leave you there. I'll get back to monitoring these trades and look out for notifications on those coming through shortly.